Good morning, everybody. It's in the money. I'm out of pain meds besides Tylenol, so my ass hurts, and they didn't give me a donut pillow to sit on, so I'm sitting on one of the most expensive chairs I ever bought like 4 years ago and complaining. Let's start with the obvious. The market right now is acting like it's incontinent. The second a red candle appears, every random finance dude on Twitter or X immediately loses bladder control and starts yelling bubble over and over like deranged parrots while pissing on their 1050 Ti with Robinhood Legend open. Surely a 4% dip in QQQ means this is it. It means you're finally right. This is your moment. This is literally the entire stock market collapsing. Hooray, you finally did it. Your puts are printing. You caught the AI bubble, and the AI bubble is popping.
Pop the bubble! Let's get this over with so I can go home and play my clarinet.
No!
Now, before I go further, this is going to relate to my Autopilot. A lot of you guys aren't quite sure what Autopilot is, and I want to describe my thesis on the markets first before you dive in and automatically have your trades track my trades in real time in your portfolio. So if you're interested, just explore the description down below, but let me give you my outlook on the markets first. It is truly incredible how quickly people out there can go from I missed the rally to this is 1999 again without acknowledging the possibility that maybe, just maybe, they're projecting their own fear like a middle-aged man blaming his marriage problems on Mercury being in retrograde. I mean, it's basically technical analysis, isn't it? And quite frankly, it's fundamental analysis to some degree. That's why you see analysts having vastly different ratings on the same stock. It might range from $40 to $500. Nobody knows what they're doing with technical analysis. Nobody knows what they're doing with fundamental analysis. Even the pros have wildly different price targets for the same stock when the idea is you discount the future cash flows the company creates, and that gives you the intrinsic value of the stock. Unfortunately, that's incredibly hard because you have to predict the future. I have been gifted with that ability. For example, I know I need to take a shit in about 25 minutes. It honestly makes me think of all the hours I wasted getting a finance degree, and yeah, here's me actually getting that finance degree, so I have some credibility. Yeah, I didn't go to graduation because I don't like being congratulated for forced suffering. We have people on Twitter or X hyperventilating because the NASDAQ took a tiny dip. I'm looking at it right now. It just bounced from like -2% to -0.46%. Relax. Markets correct. Markets are supposed to correct. I'd be more concerned if they didn't correct because it would be complete irrational exuberance. And quite frankly, this is a small correction compared to the massive run-up we've had before. But it's not a complete dismantling of the market entirely. If the market didn't correct, we wouldn't call it a market. We'd call it a Ponzi scheme with a Bloomberg terminal. It's a sign of health, not of imminent collapse. It's the financial equivalent of coughing. You cough because your throat is clearing, not because your lungs are about to explode. That is, unless you like chain smoke Marlboros like rolled in shit coins, but that's another story. Or if you're my grandpa, let's just say that there are some exceptions. I miss you, Pop Pop. He always said the trick to longevity was a pack of Marlboros a day and 8 sodas, but he didn't seem to say a whole lot at his open casket funeral when he passed at the age of 59. Didn't even make it to 59 and a half, and he had quite a big Roth. How do you think my Roth is so big? That's a joke. Kinda. And here's the funny thing. Everyone is out there quoting Warren Buffett, and me, myself, I've been criticizing this a lot lately. It's be greedy when others are fearful, and we'll just leave it at that part. They've been quoting it like they've read an investing book. Nobody's read an investing book, which is when one of you guys goes to the comment section and chimes in and says, I've read A Random Walk Down Wall Street, and it's on my bedside table next to some tissues and lotion. Like, buddy, I read full textbooks on valuations of securities. It's pointless. It's proven by the fact that nobody can value securities accurately. You either have to, one, feel it in your balls, or for me, ball, because I'm missing one. I lost it on the bet, and it's the only bet I ever lost. But not gonna lie, that one was not fun. Or two, you have a thesis driven by ideas, not just numbers. It's important to have, earnings increasing and not driving into the dirt, but it should be around ideas, not just numbers. Or 3, you just really love a company that's moving forward. That's how you decide what to buy. If you did fundamental analysis, as best you can, you're going to end up just like these analysts, between $40 and $500. But nobody ever asks themselves, wait, am I the fearful one? No. Everybody likes to pretend that they're calm, rational, they're stoic, they're investor observing the peasants panic. Meanwhile, the same people have portfolios that are 93% cash, 100% regret, and they're Googling, should I sell NVIDIA at 2:14 a.m. with trembling hands on their iPhone 5. Just buy VTI. I won't watch. I won't tell anybody because I know they're the ones who will have to live with the shame and regret. But listen, that's not how I see you guys. That's not how I see my people. I see rational men. I see strong men. I see courageous women. I see Amazonian women. I see 7 feet tall, bare-breasted women. I see traders who know when to double down and when to fold, and I'm calling this market's bluff. And if that sounds outrageous, you've proven my point. Everyone else is terrified of a bubble. Buying puts across all sorts of time frames, depending mostly on how much you can even afford. Dreaming of NVIDIA going to $40 by next Friday and making $1 million is irrational. And quite frankly, if you've noticed, Michael Burry has closed his fund because he has lost a bunch of money doing this. Yes, I know he has positions still open. I'm not an idiot, and things have tanked, but he's had these short positions, these long put positions open for ages. He was short the markets like on AI hype in 2023. This guy's an idiot. He didn't learn from the first time around, which was you can ride the wave up and then short the market. He did it right. He was early, but not wrong. Now he was too early. He should have rode it up and then shorted the market, and that's my goal. Should I have started that in 2023 before I leveraged myself out the tits with long leaps? Yes, that would have been beneficial, and yet we're not seeing complete disruption in the markets yet. We're just seeing a pullback, in my opinion, of course. You do whatever. You want to buy a bunch of put options, be my guest. So this is the entire reason I'm long, and not just a little long. I'm pretty obscenely long, almost recklessly long in the way that makes traditional investors look at me the same way a suburban mom looks at a Trader Joe's checkout employee regretting her entire life. I'm so long the AI wave that you'd think that Jensen Huang personally threatened my family. People keep calling this a bubble because in their minds, anything that goes up too much must come down. But what also goes up too much? Your anxiety, your blood pressure, the temperature of your laptop when you open TradingView. I mean, how many people talk doom while holding dog water altcoins, yet those get to stay? I mean, even I'm up. I'm pitching a tent so hard right now, I'll be sure to let you know as soon as mom walks in. We are not seeing bubble behavior. A bubble isn't a bubble until idiots show up. The idiots aren't here yet. Yes, you see a lot of venture capital going into dumb companies. Those are idiots. So there's pocket bubbles, but the whole market is not yet a bubble.
Whoa! Hey, don't I got a say in this? I'll see you later, SpongeBob. Things are getting a little weird.
And you can definitely tell because Andre Jick is talking about how it's a bubble. Some other guys, I forget their names, are talking about how it's a bubble. A bubble happens when everyone's completely fucking manic. They're still outside, pacing nervously, waiting for a sign from the universe to say that it's safe to buy things they've been calling overvalued for 3 straight years. We are not in the champagne phase, okay? It's not the roaring 20s yet. We are in the everyone is still scared shitless phase, even though it doesn't look like it because the S&P 500 PE is slightly overvalued, which means we're early. Early to what? Early probably to a bubble. Things are bubble-ish. We're leading up to a bubble, but we're still early. And this is a fundamental change to how the world is going to work going forward. And early is where money is printed. And this is exactly why I use Autopilot. So I'm tying this back in because here's the truth. Most people are not built for markets. They're just not. They panic sell. They buy random stocks that don't make any sense. I know a guy who's 60 years old, refuses to take any risk because he just panic sells every time he buys a stock. He's doing fine enough, but imagine missing out on compounding returns when you're almost 60. He might be 60 or more. I actually don't really know. Sorry, I won't say your name, but sorry. Most people are built for running away from saber-toothed tigers and hoarding berries. Your brain is not evolutionarily optimized to look at a red candle and say, oh yes, this is an opportunity. Your brain sees red candles and screams danger. which is backwards. And suddenly you're selling high and buying low like a toddler trying to jam square blocks into round holes. And Autopilot fixes that. Autopilot says, relax. I'll do the thinking. You do the existing. That's why I love it. I do the thinking for you. You get to relax. And you don't even have to throw your whole portfolio into it. You can just throw a section into it too. When I make a move, your portfolio mirrors it automatically. You don't have to time entries, stress whether a dip is a dip or if it's the beginning of the great fiscal rapture. You just get to link it, sit back, and let me do what I'm already doing, which is in navigating the insanity of modern markets with the grace of a man sleepwalking across a tightrope in silk pajamas. And yes, before you ask, my actively managed portfolio on Autopilot is tilted aggressively long, not delusionally long. I can't even do leap options on there. It's just stocks, which I'll get to in a second. Otherwise, I would be delusionally long. But long in the way you're going to be long when the world is literally inventing a new industrial revolution and everyone else is still trying to price it like it's 2012. I'm holding high conviction AI infrastructure, rotating when things genuinely get overheated, adding when fear spikes, and slowly edging into diversification only when people finally stop being scared and start doing stupid shit again. I can't wait for that moment. If you've ever ridden a bull market before, you know the moment I'm talking about. It's when the average retail investor starts posting memes about becoming a millionaire. Bloomberg does a feature piece on some teenager who turned $600 into 4 million trading options during chemistry class. Now that's when I rotate. Not now. Now is when we hold. And for my foreign degenerates who DM me every day in complete despair, Adam, please, I want exposure too. I live in insert country that still hasn't updated trading regulations since the Ottoman Empire. What do? I got you. Join the Discord. It's in the description below, as well as Autopilot. It's more hands-on. It's more personal. It's more expensive because I'm in there sharing both options and stock trades, but also talking to you because I actually answer your questions like a human being, and I'm not being like outsourced by a chat bot written by a 15-year-old for their AI development high school project. You get all the trades, you get all the breakdowns, you get the reasonings, you get the options, the dumb jokes, existential dread, everything. If you can't use Autopilot, the Discord is the next best thing. Possibly even better if you're the kind of person who wants to ask at 11 p.m. whether you should roll a position or let theta slowly eat your soul. Now, I just want to say that Autopilot is considerably cheaper, and the hands-off approach makes it preferable in my opinion. And that's almost slightly shooting myself in the foot because it is a lot cheaper. It's like $49.99 a quarter versus $40 a month. But some people do a combination because there's a benefit to being able to not worry about stocks and talk about options and see my options trades and ask me questions and stuff like that. So you can do both. And I'm up 60% since the inception of my Autopilot portfolio, the actively managed portfolio, which was incepted in late January of this year. Now, I could slap a discount code on the premium section of my Discord, like it's not a bubble, or fear is for exhausted men, or long and strong dong. But honestly, I'll probably just wait until I see how dramatic people are in the comments before choosing something appropriately mocking. But listen, whether you join Autopilot or not, whether you get into the Discord or just lurk from a distance like a divorced dad watching his kid play soccer from behind a tree, smoking a cigarette and throwing it into disappointment when he shanks the ball into the crossbeam, which I've done many times before, you need to understand something. This is a structural shift. This is capital flowing into the next defining technology of our era. And now that might ring some bells in your head and go, wow, this sounds like the dot-com bubble. This is different. People were buying like pets.com. They're buying companies that had no earnings. There are plenty of large companies that are heavily invested in AI that have strong earnings. And there are also ones that are more speculative that might be worth playing. There are ones that they're complete dog shit. So that's what makes it pocket bubbles right now and not a complete bubble. We'll wait until things get overhyped, until things start, ratios start expanding to the point where it's just completely unsustainable. You can't be afraid to get in and instead sit out. You can get in early, ride the volatility, and let the compounding do the heavy lifting while everyone else performs spiritual rituals trying to time the top. And honestly, trying to time the top is the exact same thing as catching a falling knife in reverse. I've seen stock charts with more laser lights than when I do Molly at raves drawn on them to justify downturns that never materialize. And for the love of God, please, I'm begging people, stop with the "you are here" pictures and the overlapping charts that share no economic or fundamental similarities. They look similar, herder, so they must do the same thing. Don't say I didn't warn you. Here's a thread on Twitter. I've seen that for years now. It hasn't happened. Please stop. Those charts, just because they look the same, it doesn't mean shit. I can find two random charts and overlap them and make them look the same, and they can be two totally different companies. It doesn't imply anything about the future of either of them. So that's the pitch. It's not even a pitch, honestly, just, reality with a snarky bow on it, I guess. Even Burry folded. Like, I made a video on that yesterday. He at least closing Scion. He might still have a family thing going on with some positions open, but the fact that he felt like he was out of sync with the markets goes to show that not only does he not feel fiduciarily responsible for the people that he was trading on behalf of, but he's probably going to eat into his own money as well. And I can't wait to see that happen. I'm sorry for the Burry fans, but it just cracks me up. Maybe I'm just mad because he blocked me on Twitter. So are you going to follow in his footsteps and eat losses for months or years, shorting the most transformational technology of our time? Sure, you could buy puts out in 2 years, but there's no guarantee exactly when this is going to turn into a bubble and pop. I think, honestly, the best option, I'll shut up there. Autopilot is the simplest way, and I'm trying not to say this like an ad, but it is really great. It is the simplest way to stay synced with my moves without letting fear hijack your brain, because you get to sit back and relax and just let things happen in your portfolio, and you can check and see. You can even improve trades if you want to, if you want to feel more hands-on. The Discord is rowdier, more hands-on version for people inside and outside the US who want deeper insight. The market is not melting down. It's cooling off before reheating, and I am very unapologetically riding the AI wave until the wheels fall off. And a lot of people ask me, well, how do you know when the wheels fall off? It's not that I am riding it and then trying to call the top, right? Because that's trying to catch up falling knife in reverse. Instead, I'm riding it, and as I get really good returns, I start rotating into more conservative positions. However, right now, I don't think that's the time to do that. Now, it would be rather unfiduciary of me to not say this. I could be wrong, but
or you're wrong.
Sure. It's possible I'm wrong. I just don't know how. I guess when someone's wrong, they never know how.
links are in the description and probably right next to my face. This is In the Money, and my ass still hurts if anyone's wondering. I love each and every one of you in a special and unique way. Peace out.